The Holy Macro Show is back, and there's a lot of things going on. The gold, the cleanest dirty shirt in the market. And people always talk about the dollar is the cleanest dirty shirt and all of this stuff. And it's like, really, if you look at it this year and for a while now, gold has literally been the cleanest dirty shirt. It's been an uptrend for a long time. I still wouldn't bet against it by any means. If you look at the S&P 500, I can make a case to bet against it. If you look at Apple, if you look at big tech in general, like you can make cases to bet against these things. But if you really look at gold, I really don't have a case to bet against it here. There's a lot of reasons to be bullish on it fundamentally, technically, just positioning wise. Everything you look at, gold is still a pretty good place to put your money. But Charlie put this out the other day and as a tweet, and so I just wanted to share it today. So percent off of 52-week highs. Gold is only 3% off of 52-week highs. S&P is only 5% off 52-week highs. And then when we get down to big tech, we're looking at 9%, 14%. Microsoft is making a huge topping pattern right now, actually. Maybe we'll talk about that a little bit later. But that's down 16% from the 52-week highs. Google's down 19%, Nvidia 22%, Bitcoin 24%, Coinbase down 41%. So I mean, and at the bottom of it, he put some of the meme coins. I know everybody wants to hear about those. I could really care less, but it is interesting to see how far these things have come off of their highs. You got the Trump coin down 70%, and all the way at the bottom, you have the Molina coin down 94% from 52-week highs. I mean, this is a huge pullback in these meme coins. Not to mention, didn't the SEC, and you would know this, maybe Kashop too, didn't the SEC just come out and say that they're not going to be doing anything with meme coins or worrying about that?
Oh yeah. So I mean, the president's launched his own meme coin. So at least retrospectively, you have to say that meme coins are legal. They are not securities. Otherwise, you have a problem with the president, right? So, of course,
Yeah.
they did that. I'm not very surprised. I'm actually not very surprised at anything the SEC does at this point. Like what Gary Gensler did, his legacy, if anyone's been in the markets for a decade, they know this. So the guy was at Goldman Sachs, then he goes on to the CFTC, which is the commodities regulator. And during his watch, MF Global happens. So MF Global was this big broker for commodity futures, and they went bankrupt. They embezzled customer funds, did all of that, and it all happened under his watch. And who was the CEO of MF Global? One of Gary Gensler's old buddies back at Goldman Sachs. So what happened? The company was folded, no charges were pressed, the guy got away with his crime. And after that, he comes onto the SEC, and it's pretty much the same thing. Like under his watch, you had all sorts of scams happen. And right when it looked like all these scams are going to break, he resigns, says, "Goodbye, I'm done. I facilitated this. Now someone else hold the bag." It was kind of like that. So at this point, I'm not surprised at anything the SEC does. So that's where I stand on it. I have no respect for the regulatory agency, given how they have allowed so many scams to persist for so long and haven't done their job. So
Oh
that's my
yeah,
take.
I mean it's been nasty, and this market has just been full of things, and not to mention crypto, and not to mention. So for me, it's like I'm glad the government stays out of things. That's great. Stay out of most things. Awesome. But at the same time, like when there's some extreme things happening at the moment where the rest of us would end up in prison for doing any of these things, whereas you could if I became, if I became in charge of some, let's say tomorrow I become the CEO of Walmart and then I make Walmart coin or something crazy, like I'd probably end up in prison. But the president does it. We kind of see people just go, oh yeah, you were stupid to not own it, and then it looks like this. That's the thing that happens with these things again and again. People always talk about, it's this one person keeps coming up on my page every time I make a chart of gold, and he's like, people are going to get hurt, the gold buyers are going to lose money, this thing's going to kill a bunch of people. And once again, it's just like, hey, it's gold no matter what is pretty safe. Out of all the things, if you're talking about, like, if I'm out there telling people, hey, like, Trump coin is in an uptrend, or Molina coin is in an uptrend, you got to own it. Like, that's a problem. That's something that can fall 90% in a day. But looking at something like gold, even the S&P 500, yeah, I'm not the biggest fan of it. I don't own it, but you're probably not going to get killed for 94% at any point in that. It's too liquid. There's too many things behind it. But these type of markets, man, you're just kind of asking for it. MicroStrategy, also another one, on 56%. So you could share a little bit about that, because you know a lot about his history, and I'm sure people want to hear more about what's going on with MicroStrategy. And so, like, to me, it's a leveraged Bitcoin fund at the moment. So what do you think about MicroStrategy?
Sure. So MicroStrategy, I ought to go back a little bit to the history, and it's wild because it feels like history is repeating. So during the dot-com bubble, they got busted for accounting fraud. So what they used to do was they used to get these software contracts coming in, and they would book a portion of the revenue upfront, and the rest as and when the contract happened. But the problem with booking that revenue upfront is you get a lot of leeway to play with the numbers. Do you say, okay, I have to deliver this over 5 years. I'm going to book 80% upfront because I need to manage my earnings, show growth, whatever, or I'm going to book 10% upfront. Now that's completely up to their judgment. So they played fast and loose with the numbers, and then they came out and said, oops, we were wrong. We never should have done this in the first place. And the stock lost something like $11 billion of market cap in a day. So the stock went from something like $300 to a few cents when that bubble burst. And Michael Saylor, no one pressed charges. He just got away with paying a small fine, and the stock went into obscurity. But this kind of tells you the kind of person that he is, because you know what he's been associated with. Now, if you go read press articles from back in that era, the statements sound completely preposterous. It's similar to if you go read Palantir's shareholder letter, the kind of, like, I mean, the CEO deserves high scores for his Greek and Latin essays, maybe, like maybe he did very well at school, got A+ grades, and he's writing the same in the shareholder letter. So you look at Michael Saylor's interviews from during the dot-com bubble, it sounds like that, something like we are an information elixir, some nonsense. It's just what he says about Bitcoin right now, swarm of cyber hornets or something like that. So fast forward to 2020, and no one cares about the stock. And there are a lot of reasons no one cares about the stock. And mainly that's because Michael Saylor has a controlling interest in the company through his voting power. So there are two classes of shares: the class that trades on the stock exchange, that has 1/10 the voting power that Michael Saylor's class of shares has. So this way, he owns a small percentage of the company but retains complete ownership of all the major decisions. So no one can vote him out. So kind of dictator for life kind of thing. So what happened was he came up with the strategy: let's add Bitcoin to the balance sheet. Market liked it, the stock jumped, and then he started talking about it more and more. Now the funny thing is, 5 years later, everyone knows MicroStrategy as the Bitcoin company. But when they started, which was August 2020, they were just talking about, okay, we have some cash, let's just put it into Bitcoin. And because they were the first person to do it, and apart from the mining companies, no one else owned Bitcoin, the market loved it. And because the market loved it, they bought some more. Because basically, institutional investors were throwing money at the stock, because right then, if you remember, the only products that had exposure to Bitcoin was the Grayscale Bitcoin Trust, which was OTC, and institutional investors have mandates which prevent them from owning those OTC stocks. So they piled into the Bitcoin miners, but the Bitcoin miners were pretty small market cap. And the problem with the miners was their profitability was dwindling, because what happened was electricity costs were soaring because of the inflationary pressures that we saw post. The Fed printed $3 trillion in 40 days and during the pandemic. So inflation was soaring. The miners were kind of not doing as well. And MicroStrategy, which had a software business which was losing a little bit of money, but not much, it felt like a better choice than buying the Bitcoin miners. And institutions couldn't buy the Bitcoin ETF itself. They couldn't just go onto Coinbase and buy Bitcoin directly because of custody issues and such. So they piled into MicroStrategy. And I think that's where Michael Saylor got his aha moment. And he's like, if I can leverage Bitcoin, then I can do something that hasn't been done in a long time. So he started issuing debt, he started issuing shares to buy Bitcoin, started marketing Bitcoin. The market loved the message and the momentum kind of grew. And now it's gotten to a point where, although the company is technically regulated as a prepackaged software business, the software business is kind of a side hustle. The main business and the company itself calls itself as a Bitcoin treasury company. Now, this Bitcoin is not a security. The SEC has been clear on that. It's a commodity. But here you have a company that exists solely to financialize a commodity, and it's being classed as a software company. So the guys who regulate software companies, they are the ones looking at the company's accounts, whereas a company of this nature, it should ideally fall in the commodity segment. And no one's talking about this misclassification. So that's point number one. And the second point is, if you look at their Bitcoin buys last year, so you go to strategy.com, they have a very clear dashboard where they show all their buys. They are extremely transparent. So something like the Fed, the Fed does all sorts of things wrong, but they absolutely nail the data. And it's the same with MicroStrategy or now it's Strategy. They have extreme transparency in terms of what they are doing. So you go look at the data, you go look at Q4 2024. They purchased around $20.5 billion worth of Bitcoin, and their purchase price was like a few $100s away from the 2024 closing price of Bitcoin. So you know how much Bitcoin went up in the last year, and their purchase price, instead of being something closer to the average of the Bitcoin price during the quarter, it was actually the exact closing price, which was the high. So
Mhm.
basically, they bought everything at the high, which just means that either the guys who are trading Bitcoin or buying Bitcoin on behalf of the company are absolutely clumsy traders, or they deliberately ran the price up on themselves so that they could get that high close and they could drum up that excitement. So, which explanation? I mean, my take on it, I think from my tone is pretty obvious, but I'll leave it to you to decide whether they are incompetent or they just were trying to get the price higher through what they were doing. And the strange part is, once they stopped buying, the price just crashed. And they tried propping it up. So 2 weeks ago, they raised $2 billion to buy Bitcoin. Once again, if you look at the VWAP, it's obvious they are buying it close to the high, meaning those orders are getting front run. And that is destruction of value for shareholders. Now, in a regular company, when you see this happen, shareholders will sue because there is negligence here. That it's clear sign of negligence. So even if you think they are not getting front run, there is something that's happening that's grounds for a lawsuit. But here, because it's a control company, you can't kick Michael Saylor out, and no one cares enough about the stock or sees what's happening to put out a lawsuit. So you have gross shareholder abuse going on with either the front running or the Bitcoin strategy, but no one cares. And the moment the stock tanks, I think that's when people who have lost a lot of money will start to get interested. That's when the lawsuits will fly. So this goes to Nvidia as well. So Nvidia in 2017 made a lot of money from the crypto bubble. So that time Ethereum, which was a proof of work coin, so you could mine it on the Nvidia GPUs, and they never disclosed any of this. They just said it's gaming revenue, it's from a gaming sector. They never said it's from crypto. Then the market tanked, those sales disappeared, and then there was an investor lawsuit. And last year, Nvidia asked the Supreme Court to dismiss that lawsuit, saying, we are not liable to provide this information to our investors, so our investors should stop suing. And Nvidia and Facebook both made this case to the US Supreme Court. The US Supreme Court thankfully shot them down. And that's why you're seeing these moves happening, because once the bubble bursts, that's when people pay attention to what's actually going on. Because, when things are good, you're lulled into a false sense of security by the price action. It's going up every day. You're making a lot of money. Does it really matter what the fundamentals are at that point? Who cares? You're making money, right? When it starts to go down, that's when you realize, okay, do I really want to hold on to this? Or is there a reason that I should sell? Is there a reason that I should get out? Or any of those questions. Once those surface, I think that's when these trends end. And maybe I think that's pretty much what's happening now. So the picture that you show which has all these stocks declining from their all-time high, I think this is a time where people are going to start paying attention to the fundamentals, because until now those fundamentals don't matter, but once the price starts going down, the fundamentals absolutely matter, and that's what we are seeing.
I think the thing when people say, and me as a price action trader, I'm sure people get that idea, but fundamentals always matter. And we've been doing this for a while, and you've talked about Nvidia, and this is what I always love about your analysis now, especially that you do both technical and fundamental, which is, hey, this is my thought on Nvidia, but hey, it's going up. Like it's continuing to go up and to the right. There's nothing you can do in that situation. And once again, it's like, as a trend trader, like, yeah, I'm sure I've invested in frauds that are in uptrends and so on. However, as a trader, these things happen. However, as an investor, like, you have to understand the difference here. Like, we're talking about, you mentioned Bitcoin and all these things happening. You start to sell out of your positions. Everybody thinks you're crazy. Now, then Bitcoin starts to come down the other direction. Now you look smart. Like, once again, you got to understand the way you trade, the time frames, and so on. And I think that's the best idea that we can all do here, is understand that fundamentals do matter. In the short term, sure, it doesn't quite matter, but it does catch up to the market, and at some point. And part of the thing that you and I have talked about, we've had different reasons for this, but it's a rotation out of big technology, which will put a huge amount of stress on the S&P 500, considering it's over 50% in technology. If you weigh in communications, which is things like Facebook and Google, and if you weigh in XLY, which is consumer discretionary, which are things like Amazon. So you weigh all these things in, like, we're over 50% in technology at the moment. And then let's say, we have the biggest winner of the cycle, which is Nvidia. Let's say it does have fraud. Let's say that starts to turn over. And this is the thing I always talk about sectors, is understanding the leaders. If you get into a situation where you look at Nvidia rolling over, then you look at, and here's a great example. And somebody mentioned this to me the other day. Doing things in hindsight doesn't work. Anybody can do that. Well, I've been trading for a long time, and some of these situations actually are things that I've actually traded through and traded correctly through. And Kashop, you know this from 2018, which is, I was buying put options in 2018 on all of big tech, basically putting these out over and over again. And big tech, the way this worked in 2018 was big tech was leading the way, and it was the only things really holding up the entire market at that point. And then you had Facebook had a crash, and then I think it wasn't Amazon yet. It was Google. Google started to go down, and basically it wasn't Mag 7 at that time. What did we call that back then? Do you remember?
The fan
The
mag, and
Fang.
the
Yeah.
fan. Yeah,
Yes. So the Fangs. So basically, it was Facebook, Amazon, Alphabet, or Facebook, Amazon, Netflix was in
Apple.
there,
Yeah,
Apple. Yeah. So, like, basically, and Microsoft was also kind of in there as well. But so we called it Fang M, I think. And so those started to turn over on their head one after another. And the only thing holding up the market in October was Apple. That was it. One stock. Their earnings came in, and next thing you know, the whole market came down like a ton of bricks very quickly. And then you got that one of the quickest corrections that happened basically in December. Just, it was breaking down every single day through Christmas, December 26th. Powell comes out and says we're market neutral. We're going to stop raising rates, and then the market basically bottomed right there and didn't look back for a while until COVID. So once again, understand that these big stocks, they matter. And if you are trading the S&P 500, you have to pay attention to these big stocks, because these are going to affect your portfolio, because they are the biggest part of the S&P 500 at this point. But let's keep going. We'll jump through a couple things. We did get a couple questions. And so one of the questions was, What would you say the biggest opportunity in the market is in the next 3 years? Kashop, you can answer, and then I'll go after you.
I think it's the inflation trade. And I've been saying this for the last 6 7 months. But the thing with trends when it comes to commodities is that they can go on for a really long time. So even if you are 6 months into it or a year into it, that's still early because these trends last a really long time. And there are research papers on this. So the NBER has one called Facts and Fantasies about Commodity Futures. So you can go look into the math. So I think what's happening is right now we are kind of seeing a little bit of move in the commodities. Some of them are making the news, like coffee is making the news, then orange juice was making the news, all the way up, all the way down. Cocoa is always making the news. And of course, I can see from your profile pic, yes, gold. Of course, gold has been in a bull market. It's been spectacular. And I think that's set to continue. But all the other commodities as well. So, right now, what happens is when people think of commodities, they think of the big three or four. So, it's like gold, copper, oil, natural gas, and they don't go beyond that. So gold, it's been in an uptrend. Copper has been in an uptrend, but it's been very choppy. Natural gas is just gone straight up. It's doing what natural gas does. Whereas oil is starting to feel like maybe we are going to have deflation after all, because oil in the 60s and 70s doesn't really scream inflation. You want to see oil well past $100 to say that yes, there is inflation. But oil right now has some very interesting dynamics, and that's because of the Chinese tariffs. So when you look at WTI, which is what everyone looks at, you have to actually look at Brent as well. You have to look at what's happening in Dubai crude. So if you look at the physical oil market, there are a lot of things going on with scream inflation. And if you look at capex, again, it screams inflation. So everywhere you look, I think the signal is pretty strong that inflation is going on. Now, it may not be apparent right now if you just pull up the charts of the commodity futures, but I think it's going to become increasingly apparent going forward.
No, I like that because this trade and gold kicks off the dinner bell in this cycle. So when you back test it, you see that gold usually is the first one to move. And then everybody goes, yeah, see, there is no inflation. It's just gold. People are hedging, people are using gold for a safe haven, and so on. So that kind of continues to work down the road. And then as you move forward, you start to see, oh, well, now some of the other ones are moving. Usually the softs start to move. They randomly make big moves. And once again, these are big supply issues. If you look at cocoa, it was a supply issue. Coffee's kind of a supply issue as well. But that combined with what we're seeing in the currencies, because that's the thing about all of what we do here, and understanding macro trading. What macro traders do is understand that the currencies also matter. So if we look at all these currencies against the dollar, we look at the Brazilian real, we look at the fact that China and all these other countries are having major outperformance this year, it's kind of telling us that we're heading towards a more weaker dollar cycle. In a weak dollar cycle, you start to see things like crude oil and so on start to make big moves. So I think right now the one of the trades that I continue to look at, there is no such thing as an easy trade, and there's no such thing as a 100% winner. But I think silver looks like one of the best ones. If I was really to take a big bet and put it all on one thing, and once again, I would never do that, and I'd never recommend that. But I think silver looks really, really good. I think silver is probably the next thing to make a big move, and I think you're going to get the most alpha looking at some of the silver miner names that Kashop picks. Those are going to probably be the ones that make really large moves. And so let's hop to the next one. There's no more hedging on gold. I'm not sure what that exactly means, but no more hedging on gold. If you could explain that a little more, or Kashop, if you have an idea what that means, go ahead.
No, I have no idea what that means.
Okay. And then which metal does Trump really want from Ukraine?
I think the deal was for rare earths. That's
Mhm.
because China controls the supply chain and they've already imposed export bans so that gallium and all the metals that go into the semiconductors, they don't want them going into the US. That's kind of their retaliation for the trade war. And Trump wants Greenland for the same reason because Greenland has this massive deposit. So I think you remember the company, it's been touted off and on through the cycles, Greenland Minerals or something. Um, I think he probably wants the deposit that they have.
And which rare earth was one of the questions too.
I think it's gallium, but I think they're all pretty necessary,
And
and
one thing that
China
came up,
controls it.
one thing that keeps coming up too is people keep asking about, if we're talking about, we talk about the commodities so much, is there any stocks that you'd say are a good way to play this?
The rare earths is extremely difficult to play. So you have two pure plays. One is Linas, that's listed in Australia, and the second is MP Materials, which is the old Mountain Pass mine in California, that's listed in the New York Stock Exchange. So you just have these two options, and there's a talk of these companies getting merged. I don't know, that rumor's been around for I think close to a year now. Nothing's come of it. So that's it. You just have two options, and the only other way to play it is to buy something in China, which is a little scary because the thing with the Chinese rare earth story, which is not always told, is that China gets a significant chunk, or at least a meaningful chunk, of its rare earths from Myanmar, and that's a sanctioned country. So you don't know what the optics are going to be for the public listed stocks if they get caught doing something that they shouldn't be doing. So that's that entire dynamic there. That's why I would just completely avoid the sector or just buy Linas and MP. That's it.
Mhm. Yeah, it's really tough to trade that sector. So let's go through a couple of these slides here. So starting with the dollar, we already talked about that a little bit, but getting into, you know, and this is not to say anything against Donald Trump, because I think a lot of people see this and they're like, oh my gosh, Donald Trump this or Donald Trump that. I don't care who's the president or anything. I'm just trying to point to things that people believe something is one way and it might be another way. So if you look at the dollar, everybody believed that Donald Trump is in office, therefore the dollar will just go straight up forever and ever and ever. And this is just not the fact. So go back to 2017, right after his inauguration, we saw the dollar come down. Now, I'm not saying that, it's because of Donald Trump. I'm just saying that people continue to point to things, and there's also fundamental reasons underlying this. So here's a question for you, Kashab. And I passed this to Kevin Muir after I talked about it one day, which is, do you think Donald Trump wants a strong dollar or a weak dollar? And what are your reasons for either one?
Weak dollar. I
And this
mean,
is this
the
also goes to the commodity cycle. So let's talk about that a little bit, tie it all together.
Sure. So Trump wants a weak dollar, and the reason he wants a weak dollar is because he is so focused on the trade deficit. I mean, if I could run a trade deficit with the rest of the world where, I just give you Kashyap coin or something and you give me everything I need in return, I would be super happy because I wouldn't have to work another day of my life, just issue Kashyap coin for the entire world and get all the hard work, all the goods and services that you provide for free. Now, the US, it prints the dollar and it gives it to the rest of the world and it gets a lot of goods in return. So that's a pretty sweet deal. So if you have a trade deficit, it means you're actually consuming way more than you produce, and people are happy to take the freshly printed currency for it, which is a sweet deal. But Trump doesn't see it that way. The way he sees it is it has made America non competitive, it has eroded America's manufacturing base, industrial base. He sees the trade deficit as the enemy, and he wants America to become a producing nation again. Now, of course, if philosophically, if you look at it, a nation which produces things in the long run, that economic strength is going to lead to more military strength. It's going to lead to a stronger country, a stronger currency, and everything that goes with it. That's how it's been. But the problem is we don't live in a gold standard or a hard asset world. We live in a world where the US gets to just print the reserve currency of the world. Now, like the Fed, there is no limit to how much they can print. We have seen this in 2008, we saw this in 2020, we have seen this with the 12 years of QE that they did starting from 2008 to 2021. So we know that the world has changed. The world is controlled by the central bank. So in that world, when you say you want to lower the trade deficit, bring manufacturing back, it doesn't imply a strong dollar. It implies a weak dollar. And that's just because you're going to be sending less dollars out. There's going to be less demand for dollars. So the entire ecosystem, which has been so dependent on the US just flooding the rest of the world with dollars, that's all going to change. Now you bring manufacturing back to the US. Will it not make a difference? We'll see. It depends on how that gets structured. But I think the message from the presidency is very clear. They want a weak dollar. And if you look at JD Vance, he comes from a small town, a coal mining town, and he says people not having jobs is the problem, which is why they get addicted to narcotics or alcohol and they become unproductive members of society. So the best way to stop all of that, to stop all the opioids and all that stuff, is to get jobs back. So people, when you have work, you have a meaning to your life. So he also prefers a weak dollar. Now Scott Bessent, I don't know what his stance is, because um, he's a finance guy and people say both things. They think that he's going to go along with the tariffs. He's going to figure out how to kind of structure the tariffs to make it a win-win. And I don't exactly know what's going to happen here. I think it's too soon to tell. Maybe in the next 30 or 60 days, or maybe once the Canada and Mexico tariffs actually go into effect, that's when we'll know exactly what the administration wants. But I think it is very, very clear that they want a weak dollar.
No, I think so too, and I completely agree with that. And so we got more of an answer on this question. Most major indices and cryptos are falling, but gold was being used for hedging. So where is the actual money going to go if gold is also falling? So here's a couple things about trading which are very important to know. In a liquidity event or deflationary shock style event, think of COVID, great financial crisis, money is going to just go into dollars if that's really going to happen to that degree. At the moment, we're not seeing that happen. So, we're seeing that money is still kind of flowing in other areas. China was up a lot of the days where the market was down in the United States. China was actually up. So money is flowing into specific areas. And I think that's important to see and something to continue to pay attention to. I think too many people are going to pay attention to the fact that money is going out of the United States and obviously it's just going into gold. It's like, no, the gold is being used as a safe haven right now, and bonds are also going up too. So there is still cash out there, so there is liquidity going into areas. And it's the thing that you and I talk about all the time, Kashop, which is it's not that the bull's over by any means. I just think the bull and maybe the S&P 500 might be a little bit over or long in the tooth, but there's other areas to invest in this market that nobody's paying any attention to. This looks like more of a 2000 cycle where we see money start to flow into gold miners, into possibly energy stocks, possibly other areas. Gold is obviously leading the way. The next thing you know, we need to see silver. So to see the precious metal bull and say, hey, it's really intact, depends on a couple things here. One is gold is holding up well. If gold continues to hold up well, I'd say the bull market's probably intact. But what needs to happen is say, let's get more bullish on these miners, let's get more bullish on these other sectors, is we need to see silver start to outperform. Silver has not outperformed yet and has not outperformed on any major basis lately. So once we see that happen, then we start to see a major move in this market. And I think that's what we really want to see to say, hey, it's really time to go heavy in the junior mining space. I think the silver mining is going to be when the major outperformance starts to happen. And so, Kashop, you even have some names, and I think that's something that you can talk about too, which is you have any, like just one name. I know you have a ton of them, and you don't have to say like whether you'd buy it today or not. I don't want you to give away what you keep for your premium subscribers. But is there any name that you're like, hey, this is a great gold miner right now or silver miner that I'm really interested in?
Sure. So silver miner, there's just one, and the problem with the silver miners is it's a lot of them are silver zinc, and zinc has kind of not been doing as well lately. So, and of course, most of them are gold, silver, which means that most of the exposure is in gold and not in the silver. So, pure play silver, I like Abra Silver a lot. It's a deposit in Argentina, kind of trades at a premium valuation compared to the gold mining stocks, which are at a similar stage in their life cycle. But that's because it's silver, and everyone knows when silver moves, it has that alpha to gold, so they kind of price that premium in. Now, I got in at a much lower price, so I'm happy with the holding that stock for the long term. But if you're buying in now, then of course the dynamics are different. Then there's one stock that I'm starting to get interested in, which is core mining, and that's they recently acquired Silvercrest. And Silvercrest is a company, so they have had two iterations, both extremely successful. And so now that they have acquired Silvercrest, I think there's some upside there. I have to look into it.
Can you say
In
the
terms of,
names again, Kishop?
yeah, it's Abra Silver. That's ABRA on the TSXV, and it's Core. Core is CDE. That's US stock.
CVE,
CDE.
CDE.
Yeah.
Okay. I wrote it in the comments on Twitter. I know everybody's on Twitter, but you guys should move over to YouTube. We could talk back to you guys. I can leave you guys comments back. So definitely get over to YouTube if you can. So go ahead, Kishop. Sorry to cut you off.
Sure. So the other gold stocks that I'm looking at. So right now there are a lot of issues going on in Mali, which are getting resolved, not getting resolved is kind of a blow hot, blow cold kind of situation. So unless you really know what you're doing, I would avoid the West African, the African miners. I mean, I'm not avoiding them, but as a general suggestion, I would say just avoid them unless you know what you're doing, and focus on the stocks which are in the US and Canada. So the US has actually been a terrible jurisdiction for permitting mines. Now that sounds surprising because US has uh, the best kind of policy when it comes to mineral rights. So most countries, if you own the land, you don't own the mineral rights, you don't own the oil rights and all that. And US is the only country where you actually do. But permitting has been a challenge, and that's because of the NIMBY mentality, which is, not in my backyard. You build a mine in even a remote location, you have all these organizations, these Sierra clubs kind of players coming and saying, no, you can't do this, you can't do that, organizing protests. And capital is already scarce, and banks, because they have their ESG mandate, they don't want to lend to dirty mining projects. So you had this whole situation where US has been permitting hell. It's not just been permitting hell, it's been tough even to get drilling permits. So you want to get it on the forest department land, then that's a whole separate process. You want to get it on federal land. Private land is okay, federal land is slightly more difficult. Forest service, forget about it. So it's been all these kinds of situations which has made US extremely difficult to permit a new mine. And there's been studies on this which shows that US has actually lagged behind other so-called tougher countries. Like, I mean, it's easier to permit a gold mine, let's say in Ecuador, than the United States. So with Trump, what's happening is that's changing. So Trump is saying, if you want to bring in $1 billion of investment, you're welcome. And he's saying that for hard assets. He's not just saying you want to build data centers in the desert, which no one looks at, no one cares about. I'm fine with it. No, he's not saying that. He's saying you want to build data centers, fine. You want to build factories, fine. You want to build a mine, fine. Come and do it. Do it all in our country. So that's Trump's message. So I think permitting is going to get a whole lot easier. So, and we've seen this with LNG. So LNG terminals, they are these massive infrastructure projects. And the Biden administration, out of the blue, they just came and said, we are going to impose a halt. Now you have these projects which have been in planning stage for a decade, and then out of a blue comes a executive order, a presidential ban saying no more. That sends a lot of uncertainty to the market, because when you have the situation, investors think, is this really a jurisdiction where I can possibly operate for the next 20 years? Is there stable rule of law? And when you have those kind of acts that Biden did to LNG, people would say, no, not really. I don't want to build. And now Trump is coming in and saying, hey guys, I want to build a big pipeline in Alaska. and export LNG out of Alaska. And he's telling Taiwan and Japan and all these guys, you better take our LNG. Forget buying from Qatar, forget buying from other places, take ours. And you better invest in our project as well. So he is actively seeking investments for pipelines, for LNG, for minerals, for factories, everything. He wants everything to be made in the US. So the permitting environment is going to get a whole lot easier. And that's why I think people should, I mean, it's your backyard. You live in the country, you understand the dynamics better than most people. So you should be looking at US projects. And it's the same with Canadian projects. So Canada has the most friendly policy when it comes to mining because mining is one of their lifeblood industries. So you can just look at US and Canada and be done with it. You don't have to go to West Africa. You don't have to go to, let's say, South America, Ecuador, any of these locations. Now, I would go there because I understand the market. But as an individual investor who's just trying to dabble in the gold miners, you don't have to. Now, you would say, what about Mexico? Now, Mexico, it's North America. The funny thing is, a lot of people from other parts of the world, like I'm from India, and if you go tell people that I've been to Mexico, they're like, oh, you went to South America. And I'm like, no, Mexico is in North America, and they don't get it. But Mexico, it's a NAFTA country, but the problem is they have all these issues. So companies which are building mines there, they face different roadblocks, and then of course they face cartel activity. Now that's going to be less of a problem, but what's a bigger problem is the country has threatened to implement a ban on open pit mining right in the constitution. So it's a big change. Now, people would say, yeah, they would threaten it. It's not going to actually happen. But again, when we are talking about capital investments, so some of these mines, especially the silver mines, there are some that have been around for centuries. Now, do you really want to build a mine where your payback is probably 5, 10 years and take the risk that one fine day an executive order comes in or a constitutional change comes in and they say, you can't do this anymore? No one wants to take that risk. So the silver miners, especially in Mexico, everyone loves them. Everyone loves talking about them, but they have this kind of black swan risk, which is not getting priced in. And I mean, you can take the risk. You'll probably be fine if nothing happens. But in case something happens, then you're screwed, right? Because it's something no one sees coming, comes into the market all at once, and then you can't exit. So that's why I would just avoid Mexico unless again you really know what you're doing, or you find these companies which have pivoted from open pit to underground. There are a couple of those. So you find something like that, then maybe. But even then, I would just say there is so much value in North America. Why bother going to, I mean, US and Canada? Why bother going to Mexico? That would be my way of looking at it.
Yeah, no, that's great knowledge, and I think that's important for everybody to know out here. Is the knowledge base that Kashap has just given you is something where it's something that's taken many years to learn. He's been in that space and covering the miners as long as I've known him. So I mean, this is knowledge that you really aren't going to get anywhere else. And so I just wanted to go over a couple charts before we head out. I appreciate all you guys hanging out. If you guys, feel free to ask questions in the comments. I try to be active and try to answer back if I can. Sometimes I get busy. We have a lot of things going on. I have a fun too, so I'm always doing stuff. But once again, just kind of getting to the silver to gold ratio. Something that you do see a lot of the time when we get to this level is that this level is a time where we see these types of moves that we're talking about. And mainly what this chart illustrates isn't some magical technical analysis thing. It illustrates that when silver really starts to move, it really moves. I mean, it's not something that we're going to see a 5% move from silver and this whole thing's over. It's something where we're going to see probably a 100% move from silver before this thing's over and done. And that's when the miners really start to get active. And that's what we haven't seen yet. Yeah, the miners have done well. I think they're actually up 20. GDX is up 20% this year already. And that's with the trash like NEM inside of that ETF. So, that ETF is actually still running and outperforming almost every sector at the moment. So, we haven't even seen silver take off. So once silver takes off, this thing's really going to move, and it's going to move in a big way. And one thing I wanted to point at, because Kashop, I've been talking about this and the idea of the cycle. And when we see this part of the cycle, like this chart brought on a lot of feelings from a lot of people. Either they think I'm saying that gold is going to be the best investment for the next 90 years, or they think I'm just saying, hey, there's a band squeeze here and we're going to see a breakout and stay long gold. What I'm really saying is gold is just outperforming the S&P 500, and I don't know how that looks. That could be the S&P 500 going down a lot more than gold. Either way, this is telling you that you want to be in gold right now. You want to look in these areas. You want to look inside of this sector and continue to find value there. And this is where we start to see that massive outperformance. I mean, go back to 2000. You see that rounding bottom that we saw set up in 2000 that just kind of continued to move higher all the way to 2012. That's kind of the scenario that we could see. And this is where we start to see the commodities really start to move. Now, once again, what we're going to see is gold's going to move, then silver is going to move, and then things like copper, which copper is already moving, will continue to make a big trend. And that's how I think this commodity cycle is already getting started, but you have to be very tactical. You can't just go buy everything commodity based and think it's going to work out well. You have to start buying things tactically. And I cover that here, for at my Substack channel. So if you guys see my Substack channel, it's AAO Research. We put out a bunch of free research for premium subscribers. You get to see the portfolio and all the trades inside of it. So you can see all of those there. And then Kashap, if you go over to his page, he's the one who follows the individual stock. So if you're looking at individual names, how you want to really get into those, he's the guy to kind of go through for that. Look, Kashap, any parting words?
I think we covered quite a bit of ground in this channel. Let's just talk about something that you can give away to our listeners. Which commodity in the soft should people be paying attention to, but they aren't? Now, orange juice is in the news, coffee is in the news, cocoa is in the news. Is there anything else that you are looking at which the mainstream still hasn't?
Lumber. But this is the hard thing. So, I got a question the other day about, how do you trade these things if you don't trade futures like us? And so the answer to that is it's very hard. It's not easy to trade futures if you don't have access to it. So at the moment, a lot of those ETFs have disappeared, but there is one ETF that has a lot of softs in it, like cocoa, lumber, orange juice, and coffee, and that's the DBA ETF. You can get involved there. You're not going to get as much alpha as you are in the individual products, but there is some alpha there. Sugar is also another one that I think looks great, and there's also an ETF for that, CANE. It's the Cane ETF. I think that one's really going to take off at some point very soon. So once again, there's two areas inside of the soft space that I think could really take off and really start to make big moves and make you a lot of money. But you really got to pay attention to the buy signals, run a system to do it. But lumber looks like it's right at a huge breakout zone. It's at a major breakout zone. Sugar is also trying to make a big move. It gave some of it back, but it's going to probably continue to move higher. And I think that's just kind of a way to look at this cycle and start to take these trades as they come. Like we mentioned earlier, copper's along, gold's along, oil is not along right now. So, take the trades as they come and you'll make a lot of money, but trying to front run it and just say, hey, I think it's a commodity cycle, let's buy all the commodities. That's just not how this works. Commodities are very different vehicles. There's supply and demand dynamics. There's all types of things that really go into these commodities. So you've got to be tactical. So I think we could end there. Any funded account where we can trade such commodities. Interactive Brokers is a good one. And best proxy for cocoa, DBA is all I can think of anymore. There is no good proxy for cocoa, sadly. I'm sorry to say that. Cocoa is not really a buy right now. It's already kind of made its run. But you could start to look at DBA is a good one. Look at what's inside of there. I did write a paper recently on it. I'll leave that in the show notes in the description for today so you can see all the different ETFs you can trade and how I would trade it if I didn't have a futures account. But I think everybody should start to look at and figure out how to trade futures. They're a lot more liquid and easier to trade than most of the options people trade these days. So, all right, guys, we'll leave it at that. Thank you guys so much. Please follow Kashap. Kashap, what's your handle on Twitter?
It's Kashyap 286. That's my name as you see here, KASHYAP 286.
Thanks, guys. Thanks, and I should start some ETFs. That is correct. I wish I had that type of pool. I absolutely would, guys. All right, guys, take it easy.